Hi, everyone. I'd like to take a few minutes and go through problem 36 in chapter 12 as a practice so that you can see where the numbers came from and the approach you should take for your other problem that will be graded in this chapter. Now, in governmental accounting, just like financial accounting, we are doing journal entries. We didn't get knee deep in the hoopla in these chapters about intense journal entries. So what I did was I created a very, very primitive, I guess the word is, spreadsheet. When in doubt, do a spreadsheet where I collected the various items, transactions, financial transactions that occurred for this city. So this is on page 622. So you may want to take this approach when you're completing your graded problems. The city of Bernard starts the year of 2017 with the following unrestricted amounts in its general fund. Cash of $20,000, investments of $70,000. It holds a small building bought on January 1st, 2016 for general government purposes. It cost $300,000. And they took a long-term debt of $240,000 on the building. It's being depreciated straight line over 10 years. And then they tell us the interest rate on the loan. Goes on to say that the general government or the general fund has 4 primary activities in it: general government, public safety, public works, health and sanitation. Then it goes on to tell us all the receipts and all the payments made. It concludes telling us about some of the activity that occurred during that year. So here's what I did. I created a very simple spreadsheet, as you can see. And I'm going to actually split the views here. Okay, let me do this and freeze the panes here. Okay. And actually, when I first started, I started with a very 3 or 4 columns, and I've just been adding to it and trying to modify it as I go. I know the cash. I didn't know any receivable amount as of that day that I started this, right? So the very beginning, I knew there was $20,000 in cash, $70,000 in investments. There was a building of $300,000 that by the end of 2016 had a $30,000 accumulated depreciation balance. And I knew there were long-term debt. So I just populated them, and I didn't balance this as to positives and negatives, or assets equal liabilities plus net worth. I just entered the information in as I knew it, and then I started gathering. So the very first thing they tell us about are property taxes. They start telling us about receipts. There's $500,000 of property taxes. Now, so $510,000 that they collected in cash. So I automatically updated my cash account, 510 increase, and I put it over here in the general column as a 510 increase, because this is a general revenue. We'll talk about the 120 in a few minutes. You can see I wasn't even paying attention to my spelling, so I'll correct these as I go. The sales taxes collected, $99,000, that increased cash, and I showed it over here in my general column. Then dividend income, again, increased cash of 20, it's going in my general fund. Then there were charges for general government activities. Now, the things that are just general revenues, I kind of highlighted in orange here. Then I said, okay, these were specific charges for the general government, and I increased my cash. Same with charges for public safety. Increased the cash over here, and you can see it's my spreadsheet started getting large. 8,000 in public safety. Charges in public work are positive 4,000 there. In cash, positive 4,000 in the public works column. And then finally, the 31,000 charges for health and sanitation. That was put over here in health and sanitation. Now the charges for the landfill increase cash, but they tell us in the second paragraph down below that the landfill falls into the public works activity. So that's why I put that 8,000 in that column. There was a grant of 25,000, and I have a separate grant column to keep track of that. And then they issued new long-term debt. So that caused an increase to cash, and it also increases our long-term debt area. They sold the above investment. So they sold this $70,000 investment for $84,000. That increases cash 84,000, decreases my investment column 70,000, and now I have a difference, which would be a gain on the sale of that investment of $14,000. I'll talk about the highlighting as we get there. Okay, so at this point, I don't know if I'm done recording all the increases to cash, but it looks like I am. So I'm going to go on to the next thing. It says there's a receivable at year end of 130,000. 10,000 is not expected to be collected. So now I added my column receivable up here because these are for property taxes. So now the total amount of property taxes increases to 630,000. Now I'm going to go on to my payments. Now remember that 120 has no impact on my cash column. I just added it into the receivables. So now the total salaries paid out are 275,000, 90,000, and I showed the payments coming out as negatives in each column. 90,000, then 94,000, 69,000, and 22,000. So just recording those salaries in the respective activities column. I'm going to fix that salary. Did the same with utilities, but subtracted the total of the payments from cash because I need to find a cash balance as I'm going. Same with insurance. Now, one of the insurance, and remember, and I didn't say this, I'm collecting this information as of right now for my government-wide financial statements, Part A. There's a prepaid amount. Of the $6,000 for the public works insurance, all of it is prepaid. Well, it was paid, but it will not be accounted for in the government-wide because we're following more accrual basis as a expenditure. It will be in the, like an expense almost in the public works area. It's going to be accounted for as an asset. The miscellaneous, these were all cash payments. And again, they're being put in their respective column. Okay, now we're going to start looking at the amount of interest that was paid because that's the next item on the list. That's why I did them in these orders. Principal, or I'm sorry, interest on the debt. Previous debt was 24,000, and you'll look 2 down. Interest on the new debt is 18. So we paid a total of, sorry, dropped my water, $42,000 in interest. So I decreased cash and then I created an interest column all the way over here to show we pay that much in interest. In between, it says principal payment on previous debt, 10,000. Okay, so I decreased my principal or my cash and I decreased my long-term debt for the 10,000. Now, the company purchased a building for $210,000. The company, see, the government, and the building will be used in the public works area. So I decrease cash, 210, and I create a new column called Building Public Works. Public safety, purchased equipment. So cash goes down 90,000 for the cost of the equipment, and this is equipment in the public safeties area. Notice I added accumulated depreciation columns for each new asset. The next item are supplies. Public works purchased 20,000 in supplies, so the cash goes down 20,000. 30% of them are still on hand, so they are still in inventory and should be listed as an asset, supplies, just like we do when we're doing regular business accounting. The other 14,000 should be shown as an expenditure for your government-wide financial statements. Next, investments are purchased. They cost 111,000, so we decrease it, show the investments as a positive 111,000. The rest of these items have no impact on cash. So, and I'll put a little highlight here. The cash balance after adding all the receipts of the city and subtracting all the expenditures or payments is $139,000. Now let's see what else affects the government's columns here, if you want to, assets, liabilities, and things of that nature. First of all, they have orders not yet received, and it tells us third paragraph down, for the equipment and supplies that have been ordered but not yet received, the city council has voted to honor the commitment when the items are received. That's very important for fund financial statements, but for the government, we haven't received them yet. We don't do anything with that information as of yet. However, the salaries at the end of the year that have basically accrued, due at end of year, will be listed as accrued salaries. And there's the total, 36,000. And then there's 14,000 for the general, 17,000. So we record them just like we would accrued salaries as an expense for a regular company, and the 5,000. Now, we have to record the current year's depreciation on the old building that's used for general government purposes. So that's an added expenditure. The depreciation on the building that was purchased for public works, it's being depreciated. It tells us on very last paragraph for 20 years using straight line. So the 210,000 divided by 20 years will give us 10,500 a year. So that will increase the expenditures in the public works and also increase our accumulated depreciation. If you're like, well, why is that a minus? Because I'm showing all expenditures as minuses. And then the equipment will be depreciated over 10 years. Original cost is 90,000. It was purchased for the public safety area, so that depreciation will be recorded in that column. In paragraph 2 there, it says the city started a landfill this year that it is recording within its general fund. It is a public works function though. Closure costs today would be $260,000. But it's not expected to close for 9 more years. The city has incurred no cost to date, although the landfill is now 15% filled. So if you remember, this is a liability. In this chapter, we talked about this. You, in your government-wide financial statements, should show this liability, contingent liability, just like we would for a normal business. Take the amount of total expected closure costs times the percent of the landfill that is filled, 39,000. And we will create a column called closure liability. We will show this 39,000 as an expenditure in the public works area because that is where we account for these activities for the landfill. The final item is on actually the last page, the next page, 624. It tells us the investments at year end have a value of $116,000. We need to write those up to fair market value. So we need to increase the investments 5,000 and create an unrealized gain column of 5,000. Takes us back to those investment chapters back in intermediate accounting. So now we have properly accounted for all the transactions. Now what's the impact? Cash has a balance of 100. I'm going to change the coloring on that. I think it's a little too dark. Whoops, that's not it. Go back over here. Let's try something else. I don't like any of them. How about the green? There we go, 139,000. The receivables, 120,000. So I just added and subtracted the items in the column. You could see my sum here. The prepaid insurance has a $6,000 balance. The supplies has a $6,000 balance. Investments, 116,000. Then we have our building and the accumulated depreciation. So we would need to subtract that. Even though I don't have it indicated with a minus sign, you do know that. Same with the building for the public works. Make sure we subtract the accumulated depreciation. The equipment, minus the accumulated depreciation. And then finally, the truck. Has no accumulated depreciation. We bought it at the very end of the year. So all of those green highlights are our current asset balances that we will use to create our government-wide balance sheet or financial position. Now let's look at our liabilities. So I'll make those a different color. Let's see, make it like that color. 39,000 in closure liability. Whoop. 36,000 in accrued salaries. We have total long-term debt of 494,000. So we've already determined those balances for purposes of making our financial position. But they first ask us to create the activities report for the government-wide. So you can use the example back on page, just had it. That one. This one it? Let's see. Now there's a really good, maybe that's it. The city of Eastern, yeah, that's the one. 1 second. Okay, sorry about that. So now we're going to start creating our government-wide statement of activity. Use page 594 as your guide, but I'm going to pull up the answer key. I'm privy to that, right? Well, let's show you where we get these various numbers. So we start with City of Bernard statement of activities for the year ended December 31st. We always have program revenues first, then we'll show the net expense or revenue and change in net position. Now let's start, and remember, we go across and down. Functions and programs are listed going down. The expenses are listed first for each major function. Then the specific charges that were made and money collected for those, any grants. And then we net those columns together for each activity function to get governmental activities. If there are any other activities that we need to account for, they would be listed next, but there aren't. So that would also be our total. So general government, we first start with the expenditure. And I don't know if I was sharing that with you. I'm sorry, I got kind of jazzed up there. Let me go back here and show you one more time where we're at, right in here. So we're first defining all this information. We're gonna have our expenses first, then our charges for services, grants and contributions, etc. So I'm gonna be flipping back and forth here, but the first thing we wanna do is find out all of the expenses for each activity. So if we go back to our Excel spreadsheet, we did that already. If we add and subtract all the items in our general fund column, our public safety, our public works, our health and sanitation, and our interest. So we've summarized all of the items that would affect these items, came up with totals, and there's your totals. And now I'm going to go back over And you can see that's our starting point. So all those numbers agree. So the total expenses for government-wide financial statements sorry, guys. Okay. Are listed. Next, we're going to focus on what kind of money was collected for each of these activities. So I'm going to go back over to my spreadsheet, scroll up, and you can see, whoops, the items that are not highlighted right in there. Now that says 764,000 for the general, but remember I have these three items up in that also. So the specific charges were 15,000 general government, 8,000 public safety. Remember we have the public works and landfill added together for the 12,000, 31,000 health and sanitation, and then we have a grant of 25,000. So going back, there's all those amounts, and there's the grant. So we've accounted for all of the expenditures by function, specific charges by function, and any grants by function. So now take negative 180 plus 15, negative 165. Negative 158 plus 8,000, negative 150. Negative 159,500 plus 12, because these are your expenditures. This is the money you brought in to support those expenditures, 147,500. Negative 37,000 plus 31 plus 25, now you have a positive 19,000. So you actually brought more money in to cover the expenditures of health and sanitation than you had to spend this year. And then the interest is on its own, 42,000. So we add up all of those, sum them together. So overall, so far, government activities have resulted in more expenditures than money coming in by 485,500. But we're not done, because there are other revenues that came in that cannot be assigned to a specific function. So let's go back over to our spreadsheet and take a look. Here is the 630 in property taxes, the sales tax, the dividends, the gain on the sale of the investment, and the unrealized gain. None of those are included above in our functions. So let's see how we add them in now. There we go, 630, 99, 20, 14, and 5. So we list them below the specific function information because these are general revenues that can be applied to all of those areas. Add them up, 768,000. So take the difference now to determine, is there an overall positive change in net position or negative change? And the result is positive, positive 282,500. What was our net position in the beginning? Basically, what was, if you want to look at it this way, equity? Well, go back. Where did we start? I'm going to go back to the spreadsheet. What you essentially do is say, okay, here's where we started the beginning of the year. Oops. 20,000 plus 70,000 plus 300,000 minus 30. Those are your assets. Subtract your liabilities, 240. The difference is 120,000. That's where you started the year. That was your net fund balance, net position. Add that to how it either increased or decreased. In this case, it increased. So your net position at the end of the year is 402,500. And your total column will be the same as your governmental activities because there's no enterprise funds. So that's how we do our statement of activities. Next, let's go to our statement of net position. Government-wide, remember, first of all, you're going to break them down by government activities, enterprise activities, right? There's only government activities here. First, we're going to list all of the assets that the city has. We already determined their balances. I'm going to go back over. Here's our Excel spreadsheet. All the way down here. Cash has a balance of $139,000. Receivables, prepaids, supplies, investments, buildings. Okay, all of this green here. So we just transfer it to our financial statement. And there's cash and cash equivalents, prepaid insurance, investments, receivables, and supplies. So there's the current assets for the city, December 31st, 2017. We subtract out the depreciation already taken on the general government building, which remember is 60,000. So 300,000 minus 60,000 is 240. There's the building public works. So 210 minus the 10,500. The equipment of 90,000 minus the 9,000 in depreciation. And then the truck that did not have any depreciation. So we add them all up together and our total assets are 971,500. We do the same with our liabilities. We have our salaries payable. I'll go back over to our spreadsheet just to remind you if you don't have it in front of you. Salaries payable I have here. Then closure liability. Now I have all of the debt in one column, but you could separate it out like they did. So I'm stop sharing and go back over. There it is. 36,000 in salaries payable, non-current liabilities, bank loan payable, closure liability landfill. Remember, they don't have to pay that off for 9 more years. And then long-term note payable. So they just split my note payables into 2 separate ones. So total liabilities are 569. So of the total assets, there's 569,000 owed on them. The total net position should be at 402,500. And we already proved that up here. So now let's define the net position more specifically. First of all, the investments in capital assets, so the buildings, the equipment, and the truck, less the long-term debt, will give us 154,500. $3,000 of our money is still restricted from the grant. If you look in your book, it says the grant was for $25,000 for salaries. 22,000 of them have already been paid. So there's still a restriction on that final 3,000. So the unrestricted part is $245,000. It could be spent for anything. So that is, so if you take the 402,500 plus the 569, you'll get 971,500. Government-wide, where we're accounting more on an accrual basis and reporting all the assets, all the liabilities. Now in part B, they say, okay, now do the fund accounting. Well, I'm going to go back and share my Excel spreadsheet. And I already copied and pasted this and made some modifications. What you have to remember when you're doing fund accounting is we don't report the investments, buildings, prepaids the liabilities, the long-term liabilities on our balance sheet, if you want to look at it that way. Okay, the statement of net position, they're ignored. For fund, the governmental fund financial statements. So I modified this so that I took those kind of things out of here, or their impact over here. So when we report for our fund financial statements, we're still going to report all these items we see in here, because these actually were received and all. Okay, we are going to report these expenditures, most of them. What won't we report? Depreciation. So I already took all the depreciation amounts. You could see here they are going into the accumulator. Let me split the screen so you could see this and read my columns. You could see, yeah, I showed it here. Okay, well, so what? I'm not even going to be using that. But I took them out of here. I did not show them as an expenditure. What else? Well, remember the prepaids? Okay. So the supplies right here, remember this? We said, oh, of the supplies, 6,000 are prepaid. Not anymore. For fund accounting, we just want to know how much did you expend. And up here for the prepaid insurance, for government-wide, we listed it as an asset. No, not for fund. We list it as an expenditure. So those will update and change the amount we'll be reporting for expenditures. Those are your major changes. So let's see how we will create our statement of revenues, expenditures, and other changes, governmental funds. And there's a great example of this one. Let's see, that's not the one I want. On page 600. So we're going to keep one general fund because that's all the government has here, but they have different functions within it. So remember these numbers here that I have highlighted, okay? And also remember these numbers up in here. That didn't change, the receipts coming in. So I'm going to stop sharing that. Now, here's City of Bernard, statement of revenue, expenditures, and other changes in fund balances, governmental funds, year ended December 31st. They only have a general fund. How did general funds increase? What kind of revenues? Property taxes, 630,000. Sales tax, 99. Dividend income, 20,000. We list all the charges for services together. They totaled 66,000. The grant, the realized gain on the sale of the investment, and the unrealized gain of the investments whose value increased during the year. So the total revenues in the general fund, 859,000. Now let's look at the expenditures. General governmental fund, 150,000, because we took the 30,000 of depreciation out of it. Public safety, 149,000, because let's see what the original amount was, 149. We took the 9,000 of depreciation out of it from the equipment. Public works, 122,000. Yeah, we took out the depreciation. We took out the environmental accrual. That's not in there anymore because you don't put it in for this type of reporting. And we added the insurance that was expended for and the supplies expenditure for the part that we said was an asset when we did our government-wide financial statements. So now the public works is up to 122. And then health and sanitation remained at 37,000. So those adjustments were made to that very first spreadsheet to come up with the expenditures, to now modify it so that we're on a fund accounting expenditure. We don't show liabilities on our balance sheet, our net position report. No, when we borrow more money or pay more money, we show it here, debt service. Principal payment on debt, we paid down 10,000 on debt and paid interest of 42,000 out of that general fund. We bought a building for 210,000. We bought equipment and we bought a truck. So these were all the expenditures we account for, 874,000. So collected 859,000 in revenue, had 874,000 in actual expenditures. So there wasn't enough brought in from our normal, if you want to, I'm using my fingers as quotes, revenues or business. We didn't bring enough money in to even cover all the expenditures. We had a deficit of 15,000. So where do we get the other money from? We borrowed 200,000 from the bank for a building. We borrowed 64,000 for the truck. So we borrowed an additional 264,000. So what's the net change in the fund balance? The 264 minus the 15,000 or 249. Now, where the heck did this 90,000 come from? Remember, on a fund net position report, you only list cash and investments. So the beginning balance of cash was 20,000. The beginning balance of investments was 70,000. So $90,000. Add those two together, your total fund balance at the end of the year, 339,000. Now, let's see what happens on the balance sheet, governmental funds. Here is our cash and cash equivalents, our investments, our receivables. We do have our supplies and our prepaid insurance here. Even though we listed it as an expenditure, it's being listed here as an asset. No other long-term assets are reported. So none of the buildings, none of the equipment. So it's current assets basically that get reported. Subtract your salaries payable or list your salaries payable as a liability. None of the long-term debt is listed here. Now, when we report our fund balance, okay, if you're going, I thought it was 339, it is. Included in this 351 is the 12,000 of supplies and prepaid insurance. So they're listed here, but then they wash out with non-suspendable. So we increase the fund balance that we report on our statement of activity for these supplies and prepaid insurance for balance sheet reporting. Commitment for equipment and supplies are reported here. Now, for fund accounting, let me go back to our problem here. And this was on the third paragraph of page 623. For the equipment and supplies that have been ordered but not yet received, we commit to paying for them. So that part of the fund balance is not available. It's been assigned already. So 31,000 of the fund balance is assigned. So what part isn't? The 305,000. Oh, yeah, so I'm sorry, right there, we forgot about that 3,000. That's that grant. So restricted for salaries. So 3,000 of the fund cannot be used for anything other than paying salaries. 31,000 was already committed to buy equipment and supplies next that are ordered. 12,000 is added to it because of the supplies and prepaid insurance above. Quite honestly, I wouldn't have even put that in there. And then salaries payable is added to the refined fund balance because of the prepaids and supplies to get a total liability and fund balance of $387,000. So you could start with that government-wide financial statement, tweak the information for you to be able to complete your governmental funds. So I wanted to walk you through the steps that you should take when approaching your graded problem. If you have any kind of questions, please post them to the discussion board.